Very quickly introducing our next panel topic, that's next-gen banking infrastructure from core modernization to customer-first design. And the topic says it all, but we have some really eminent, really mature and seasoned individuals, trailblazers, who are going to be a part of our panel here. And let me first begin by inviting our moderator, Mr. Pankaj Sharma, Head, Business Transformation, IndusInd Bank. I request you to please come on stage. Let us give him a huge resounding round of applause, ladies and gentlemen. He's going to be the one driving the conversation today, ensuring we have brilliant nuggets of wisdom. Up next, I would really request our decibel levels of applauses rise. May I request on stage Mr. D. Surendran, Executive Director, Punjab National Bank. Sir, a very warm welcome to you on stage. Thank you so much for joining us. Up next, let's give it up for Mr. Ganesh Ananthanarayanan, Chief Operating Officer, Airtel Payments Bank. Thank you, ladies and gentlemen, for the applause. Let's also welcome on stage Mr. Mathews Markose, Chief Executive Officer, Muthoot Capital Services. Thank you, gentlemen, for being here. Also, last but not the least, I want the loudest applause for Mr. Murali Mohan Rao Manduva, CTO, DCB Bank. So, leaving the strings of the conversation in your able hand.
Thanks. So good morning, everyone, and welcome to this exciting panel at GFF 2025, where we are diving deep into one of the most critical shifts in the Indian banking today, the transformation from legacy systems to future-ready, custom-first infrastructure. So we are at an inflection point. Banks and financial institutions, whether large or small, traditional or digital native, are under pressure to move fast, stay secure, and above all, deliver exceptional customer experiences. So today's discussion focuses on how next-gen banking infrastructure, including cloud-native platforms, API ecosystems, and agile delivery models, are helping financial institutions reimagine their core while putting customer at the heart of design. So joining me are four distinguished leaders who represent the spectrum of Indian financial services, from public sector giants to nimble fintech platforms. So let's begin with a round of opening insights from each of our panelists to set the stage for this journey from modernization to meaningful customer impact. So I'll start with the D. Surendran, Executive Director at PNB, who brings decades of insights into balancing stability and innovation across large public sector banks. So he spent time, more than 3 decades, in large banks like Canara Bank and Punjab National Bank, and he'll share our experiences today. So it's a question for you. So public sector banks carry a rich legacy, but often face complex challenges in tech transformation. So how is your bank balancing the need for modernization while maintaining trust and operational stability?
Thank you, Mr. Pankaj. Thank you, all my panelists. In fact, the talk about legacy of this core banking, I like to give many of you maybe not aware the genesis of this core banking in the country. See, it started way back in 2000, in the time when there was no, you can say that mobile banking or Android versions or iOS versions available in the market. And then there was no thought about the financial inclusion. Later, what it has been, the robust nature, UPI, as well as the cashless economy and the advent of technology into banking. It was not factored. But still, the core banking has given a meaningful growth to the financial sector, especially banks. It could able to integrate the branches. And today, we are running a very, very robust platform under CBS. When the technology was conceived at that point of time, the technology what they conceived was in a monolithic architecture. You call it as a solid rock structure, where the core modules like the deposit, loan advances, customer masters, transactions, everything was inbuilt in a single platform. And then it is very strongly coupled. So what the problem is that the challenges what we foresee from account of a monolithic structure is we cannot allow the fintechs can easily come into partner with our CBS. That's the first challenge we have foreseen that. Second is that the robustness of that platform, which we want to change to any other structure, which is 25 years old technology. It is like changing the engine of a plane when the plane is on the flight mode. It is like that because there is a lot of data available, and any transfer of data to a new platform will lead into disturbance in our services. In another way, it is also told that it is performing a surgery when the patient is in a conscious state. That is the technology. Today, we don't have any matching technology to change the structure of CBS. So with this, and there is the limited play for the fintechs to plug and play, and as well as the time delays in rolling out our new products and features. So then we thought about the challenges. Having seen the challenges, what is the modernization we need to adapt? Because it is a 25-year-old technology. Availability of the manpower, technical skilled manpower to handle the technology which is 25, dating back to 25 years is also a big challenge for us. So we wanted to go for an incremental upgradation of our core. That's what, the core is that from the closely coupled, we wanted to loosely stitch this through microservices. We want to take out the non-core functions under the core banking outside through microservice and introduce a middle layer to speak between these microservice services and as well as with the core. That's what the present day architecture. All our platforms, what we are newly developing, all our services, products, we are using the microservices, and as well as we call it as the hollowing the core. Hollowing the core means all the data, we have close to 550 terabytes data is sitting in our core. So we wanted to move out these through enterprise data warehouse model, so that many of the data, what it is there, will be taken out, which is all to move out into the enterprise data warehouse. From there, we can able to do our other systems requirements we'll be able to meet, so that we create a space for scalability. Because the problem with this present day core is the scalability is an issue. So we wanted to create this kind of decongesting the core. This is the model we are adopting by and large in handling the challenges through modernization.
Thanks, Dr. D. Surendran. So in fact, one of the interesting point which I've observed is that Punjab National Bank has one of the most interesting mobile apps which they have relaunched some time ago. And it's got one of the highest ratings. So you'll be surprised that the feedback and customer feedback is very, very interesting, and it's been able to come up the curve very, very fast. So our next speaker, Mr. Murali Mohan Rao, Chief Technology Officer of DCB Bank. So he comes with a very, very interesting experience. So he's been on the other side earlier. He's worked with Infosys. He comes with a lot of experience on the partner side, and then he's become the technology head at DCB Bank. So a question for you, Murali. As a technology leader, what's the vision of next-gen banking stack? And how do cloud-native, API-first, and composable platforms fit into your bank's infrastructure roadmap?
I think first technical glitch. I'm not sure. Sorry. Yeah. Thank you. Thank you, sir. So, being a technology leader, see, more often than not, when I start any session, I have a technical problem. Now I don't know who to go and ask for it. That's on the lighter side of it. But I think next generation stack is expected to be, rather it must be modular. It should have resiliency, and it should have possibly the intelligence by design. So that's the kind of a thing I think that every bank or every organization is looking forward. Second is, Sir said about having a monolithic core, and Sir also said that it's running on a 550 terabyte database, etc. So I think what we are seeing is that it's not replacing the core, which is going to help you in getting that agility. It's more of decoupling the business capabilities so that you're able to innovate faster, or at least reach to the market speed, because the customer expectations are increasingly changing every day by day, and it's becoming difficult to run any of the to create any of the products on a monolithic core. So that's the second point. The third is the way every organization is adapting to the cloud. The cloud adoption is, I think, it is there to live. And what it actually gives us is that the scalability, the elasticity of it, which are really, really required for us if we have to create the real-time payment transactions, real-time data analytics, or any of the AI models you want to implement. So these are these get constrained with the infrastructure scalability and elasticity. I think that's the second big thing that we will see on an overall infrastructure stack. Thirdly, I think API first core or infrastructure is essential, because that will help us in really creating, assembling multiple business capabilities and creating a kind of services which can run on their own. So that's the benefit that you'll see it from an API first driven activities. I think from our bank perspective, the way that we are looking at is we are looking at the roadmap being creating platform frameworks, than actually being an infrastructure management from a technology perspective. So that will help us in creating microservices, and also it will help us in terms of our scalability requirements. I think the goal for the infrastructure, the next gen infrastructure, is having flexible, cloud secure, and API driven backbone, because that's what is going to help you in creating a composable services. In DCB Bank, we follow our IT strategy is something like called ACT, that is AACT, which is the acronym taken with API and automation, cloud adoption, and technology innovation as the 4 pillars for our IT strategy, which gets aligned in terms of making our infrastructure to be able to give the necessary resilience and scalability for the bank.
Thanks, Murali, for your insights. So our next speaker is Mathews Markose. So again, he comes with a very rich experience. He's worked with large Indian banks like Kotak and ICICI, and then with some small banks, and now is the CEO at Muthoot. So a question for you, Mathews. So NBFCs have carved a niche by being nimble and tech forward. So how are you leveraging infrastructure modernization to compete with larger banks?
Okay, so first of all, good morning, everyone, and thanks for having me here. So to give you a background on what I represent Muthoot Capital, which is a very fast-growing NBFC. We are on the vehicle finance space. So we do two-wheeler, car, commercial vehicles, construction equipments, and with a longer-term vision of being able to do everything on wheels. So that's been our objective. So of the many vectors that are important in defining the success of our business, one of the most important vector is speed. How fast can you deliver service to the customer? What is the turnaround time? Because the customer today, especially who comes for a vehicle loan, is not willing to wait. So our legacy systems were pretty much fragmented, and it was partially digital, largely manual. We used to have a turnaround time of anything between 24 to 48 hours, which obviously we felt was not as per the requirement of the current times. And so over the last couple of years, what we have done is that we've moved to a cloud-native solution and API-based integrations. Today, we are able to deliver, approval to a customer in 5 minutes, a disbursement in about 30 to 45 minutes. So that's the turnaround time we've been able to bring in. And all of this happens while the entire process is invisible to the customer. So the customer walks into a dealership, and I give him an approval in 5 minutes, and I would have within that time done some 40 API calls at the back end. The entire process is invisible to the customer. He just walks in, gives his Aadhaar card or the very basic minimum document, he goes out with an approval. So I think, and that is how technology has helped us achieve scale, and that's what we've been doing. So a lot of this AI-based interventions are coming in, and over the last 2 days, I've been here in the GFF, and I've seen some people doing some wonderful work on this. The kind of developments that are happening on the tech side is really huge, and I think it's going to be very exciting times for our business. So Today, our entire end-to-end journey is digital, and about 75% of my collections happen digitally. And to be able to do that in a segment that we are looking at, the lower LMI segment, lower middle class segment, being able to collect 75% back digitally, I think is a good start. About 46% happens through NACH, about 25% comes through BBPS, and some 4-5% happens through our app. We have a Muthoot One app which people download and do that. So I think the journey so far has been exciting. While large banks have deeper pockets, but we've been nimble-footed. We've been able to carve a niche for ourselves by being very fast, and our time to the market has been extremely fast. So I think that's what differentiates us from many other players.
Sure. Thanks, Mathews. I think Mathews was being very humble. The turnaround time which he mentioned, it's actually the best in class. 5-minute sanction and 35 to 40 minutes of disbursement for a wheels kind of product, secured product. It's the best in the industry, and that's something even a lot of large banks aspire to, and they've not reached these kind of numbers. So our next speaker, again, very interesting speaker panel we have, Mr. Ganesh Narayanan. So he comes with a different background. He spent a lot of time with Unilever, and now he's joined the banking sector, and he's been with the Airtel Group earlier, and now with the Payments Bank. So question for you, Ganesh. Payments banks operate at the intersection of digital infrastructure and last mile delivery. So what infrastructure choices have helped you scale securely while maintaining a frictionless customer experience?
Thanks, Pankaj. First of all, a very good morning to all of you, and it's an honor and pleasure to be with this panel and talking to you about our experience in Airtel Payments Bank and my personal experience. First, I'll just give a very brief about the bank itself in terms of the scale. It'll just help all of us relate to the context of the key actions we've taken and how we've approached it. As Airtel Payments Bank, we've got approximately 25 million monthly transacting users. Each one of them, doing a total of approximately 35 to 40 million transactions on a daily basis. And all of these are enabled through the mobile banking platform, and through an extended BC agent network of more than 5.5 lakh, outlets in the country. We are a fully digital bank. All the processes are fully digital, and that's really, how we've sort of scaled up over the last 8 years. We started in 2017. So to us, I think there have been like 3 key aspects which has really, helped us, get to the level which we are in. I think the first and possibly the most critical is a modernized core banking system. We are cloud ready. It's a platform which really enables real-time monitoring of each of the transactions, understanding, if there are any potential failures and so on and so forth. And this modernized core banking, which is like, cloud ready, processes, as I said, 35-40 million transactions every day, with a technical decline of less than 10 in absolute number. So that's the extent of efficiency we have in our core banking system. So I think to me this is possibly the first and most important aspect which has really helped us get scale. The second thing really is around using a microservices architecture, which really helps us ensure that we are able to sort of get agility. We are able to scale each one of our products individually, rather than sort of relying on multiple aspects, and make sure that if there are any single point of failures, they are sort of dealt with and sort of addressed and so on and so forth. And this to me is the second aspect. The third, and this is something which is personally very, very dear to all of us in Airtel Payments Bank, is to ensure that we have embedded security deeply into everything which we do in the organization. Not just in terms of the InfoSec practices, which I'm sure all banks and all regulated entities do follow, but including adopting things like DAST, which really ensures that it's a proactive approach to identifying vulnerabilities and fixing them before it actually reaches out to customers. Security to us, is not just, an action which all of us need to take. It is our responsibility towards customers and partners. And we pride ourselves on saying that, we are a very, very safe second bank account for consumers to use. So to me, Pankaj, I think these are 3 key pillars on which the bank has been built. And I do believe that it will really help us scale digital and financial inclusion in times to come at a scale which is very, very relevant for India.
Sure. Thanks, Ganesh. So again, I think the numbers, what you spoke, really speaks about the volumes which you're doing. Fully digital bank, but with 5.5 lakh physical touch points. So I think it's a very inviable position which your bank is at, and I think as the way you are serving the customers and helping in the transactions, I think there's a big roadmap ahead for the Airtel Payments Bank. Thanks, Ganesh, for your inputs. So coming back again to Mr. Surendran. So legacy systems often, hold back customer experience. So what progress have you made in the core banking transformation, and how are you prioritizing customer-first initiatives at Punjab National Bank?
Yeah, in PNB, the PNB is the second largest public sector bank. We have close to 18 crores customers in our fold. We do transactions more than 12 crores transactions per day, and of which 50% are UPI based. Having this kind of a robust requirement for the transaction based, see, we have our challenges also there. See, for example, when we want to apply interest for our savings banks, we have to run for 3 to 4 days in batches, because to apply interest for that much large database. And another one is that many, the DBT, now, we're having 12.5 the accounts, and the transactions what the governments are triggering, we have to run in batches. It may be sometimes some minutes to hours. We are not able to do it in real time, because if we do implement during the daytime, it will affect our 12 crores of other transactions. So it will have some issues, slowness in our system experience. So normally we need to delay after the office hours to run this kind of batch processing system after our office hours. And another one is this data. The data is in silos, because I said that the CBS is in a closely coupled models. The data, customer data sits in deposits as well as in advances as well as in payments. All differently, it is loosely, I can say that, located. And it is called, we call it as data in silos. And we are unable to achieve the seamless integration of the customer data. This is also another issue. Having done that, what is the solution available? So we are now looking towards that kind of seamless integration. Now what we have made, that we are moving to a new data center. That is the very robust data center. We are moving to a new location with all new hardwares. The second one is that we are also migrating to the Fintech version 10.2.18 to 10.2.25, which is, again, it is robust to meet the challenges. Having said that, we have 12 crores, we expect around there will be 2-fold, 3-fold transactions in the days to come. It may going to increase, because nowadays the adoption of mobile banking or UPI is on the rise, and a lot of younger generations are going to come. There will be big challenges for any bank, for not only for us, to meeting this transaction volume. Apart from that, we are also working on this, as I told, the microservices based architecture. Any new products, we are doing it outside our CBS, so that it is connected through API gateways. And this is all other solutions what we do that. Apart from that, our offerings to the customers, all we are made digital. Today we have more than 100 products under digital liability side or as well as asset side. Both we maintain that. All you call it now 2 clicks away, 3 clicks away, 4 clicks away from the actual process. That's what we call. The more the number of clicks, it will be the more complex. Less number of the clicks is the less number of asset side product. You can say a personal loan may be 1 click away, or maybe a MSME loan may be 4 clicks away from your actual process. So this is how we are having fintechs, which are doing very wonderful solutions in achieving this kind of things we are doing. So, and apart from that, specific products for bank guarantees, we have called EBGs. A customer sitting in the house can generate a bank guarantee. And we call even the NPA customers, we call it as a OTS, one-time settlement for NPA. We brought in the product of EOTS. Sitting in the house, you can submit it all the credentials, and automatically the system will show how much money he has to pay and how much money bank has sacrificed. So every product for that matter, we are bringing the digital approach towards that. And even the customer feedback, what we are going to source is also through QR-based feedback, so that all the grievances, any customer satisfaction score, everything we can able to correlate, we increase our product features also. So that way we have many offerings, and we always see that without digital, is it the progress in digital, no banks can see the progress in their business also.
Thanks, Mr. Surendran, again for your insights on the kind of volumes and how you are managing them in a tactical manner. So coming again to Mr. Murali Mohan Rao. So, we have seen customer-centric design often collides with legacy technology and sometimes the regulatory and the compliance perspective which you have to look at. So how do you foster agile innovation while ensuring system reliability and security at scale?
Yeah, I think interesting question. I think more often than not, customer-centric designs do have a friction with respect to systems availability or systems modularity, or a technology challenges. But definitely the regulatory and compliance challenges would come into the picture. Because a typical technology person or a key developer would be mostly focused on getting the solution done, but may turn a blind eye in terms of ensuring that it is complied. I think the world has moved from earlier DevOps methodology to a DevSecOps methodology, wherein each squad or a team that actually delivering any design or a prototype uses the compliance and regulatory as part of the design itself. As all of us would know, the rework of any of the activity is more costlier than if we are able to cultivate such kind of a thing as part of a design. So I think that's the framework I guess most of the organizations do follow, which will help in creating customer-centric design, but it is regulatory compliant. And second item that possibly many of the organizations would follow is having synthetic data, so that we are not possibly messing around with the production data, but it also helps us in ensuring that our testing cycles are comprehensive and ensuring that it is aligned with the regulatory standards. So in my view, regulatory and compliance, in a typical automotive industry, I think one of my earlier mentor used to tell me that it's like a brakes on any automobile, right? Having best of the braking technology will give you confidence to run faster, which is what is required in the current realm of things, where we are trying to create prototypes and get them faster to the customers. And I think if we adopt the DevSecOps methodology, I think the compliance and regulatory will be part of your design itself, and that would help. In my view.
Thanks, Oli, for insights. So coming back to Mathews, we've seen NBFCs operating in tier 3 and tier 4 location, and it's a big market. So how do you integrate inclusive design and back-end resilience to serve Bharat's next billion customers?
Okay. So, at Muthoot Papachan Group, our core philosophy has been to cater to the needs of the common man, or make an impact in the life of a common man. So much before this financial inclusion and all became a fab word, we always strive towards, the common man. All our products, if you look at the entire group level, whether it is a gold loan, two-wheeler loan, used car, used commercial vehicles, small ticket personal loans, or affordable housing, small ticket lab, all of these are pointed towards the needs of a common man. And that's what our core philosophy has been. And our markets are largely, we are not present in the metros, or so whether it is two-wheeler, we are not present in the metro locations. We are in tier 2, tier 3, tier 4 cities. In fact, 50% of the customers that I onboard on a monthly basis, they are NTC, which is new to credit. Okay, and that's a huge number. And which means we are enabling a credit worthiness for so many number of customers every month. These customers may be the ones who would walk into a bank and may not be able to get a loan. But by taking a loan from us, we are getting them into the banking system. We help them create a track for them. And then, of course, with that track, they will be able to take better loans at lower pricing from larger banks who have deeper pockets. So we've always been, financial inclusion has always been a core philosophy. We always work towards the needs of the common man, and we will continue to, our products will continue to be focused in that segment because that's where we are driven. We are driven with that purpose. So that's been our core, and we will continue to be focusing there. Thank you.
Thanks, Mathews. So Ganesh, next question for you. So with the UPI, digital wallets, and instant onboarding becoming mainstream, so how do you, ensure operational resilience and trust with the high transaction volumes? You spoke about crores and millions of transactions happening, the kind of UPI rails which you have to build. So what kind of infrastructure and what kind of resilience you build in your systems?
Yeah, great question. I did speak about the volumes on transactions, onboarding. You mentioned instant onboarding. We onboard, approximately 1 million CASA accounts every month, both digitally as well as in the assisted mode. So operational resilience, and experience actioning is very, very material, because if we don't get that right, as in customers will, given the choices they have, they'll go to a different platform. So to me, I think again there are 3 areas, where we spend a lot of time, and ensuring sort of we get this done. I think principally, having things like load balancing, which really ensures that as and when transactions are getting processed, they are sort of processed in a very efficient manner. End-to-end monitoring, of a transaction, and making sure that each of the APIs, the response times and so on and so forth are monitored. A metric which is very, very dear to us is mean time to recover and mean time to detect. And especially for critical applications, we'd like to make sure that it's within a few minutes as and when faults happen in terms of detection and recovery. The third area, and I just want to actually spend some more time, because us as a panel also, when we're discussing, is really in the area of partnerships and collaboration. As a bank, we don't do everything ourselves. We have partnerships, with other technology companies. We have partnerships with the likes of NPCI and UIDI, and making sure that the choice of partners is done in a manner in which culturally, and compliance-wise, they are aligned to the way in which we are thinking. For us, like I mentioned, security is very, very core to us. And hence, we'd love to work with partners, who are like-minded, who would like to put security first, before, building any feature. So I think to me, these are the 3 approaches, and, to the point which, was mentioned, earlier, in terms of balancing out experience and security. To me, the analogy which I've given in the past is like a Formula 1 car. It looks really beautiful. It possibly has the best features, and is possibly the fastest vehicle on the road. It also, by the way, is also the safest place for you to be in if you're driving a car. So to me, I think it's almost like building a Formula 1 car. So that's really, how I would want to say. Sure.
Thanks, Ganesh. So I think we've got only a couple of minutes remaining. So I'll have one last final question for the panel. And it's like one question which you can take 1 sentence to answer. So I guess all of us have been coming in GFF for the last few years. So if we come back in GFF 2026, so what would be one thing tomorrow which you believe would accelerate the banking, the financial services, the NBFC's transformation in India, so from a 12 to 24 months time frame? Starting from Mr. Surendran, and then we can go ahead.
Absolutely. It's all on the global fintech, we call it as. We look forward, whatever may be the role of fintechs, what they are going to play with the financial sector. Very important, because you are the people for innovation. And we look from you the trust, the security, as well as regulatory compliance. If it is both matching, and the present-day requirements of hyper-personalization of the customers, and the bank's digital first approach, I think a better partnership with the fintech is going to rule this in the financial market.
Just to extend the similar line of a thought, I think we are into a digitization, makeover. And in this context, security and frauds are on top of everyone's mind. I'd rather like to see a robust industry level ecosystem which can help us in identifying something like the mule accounts or mule customers, which can really help us in preventing frauds to the whole customer base.
Yeah, so we all exist because of our customers, and as long as we are solving problems for our customers and helping them with easy access to credit, and from whichever place they are in, not necessarily coming to our shop, but wherever they are, if we can provide access to credit to them and make it easy for them, I think that is what is going to redefine how banking will be in the future.
For us, I think, or for me personally, responsible use of AI, Gen AI, in terms of solving customer problems, I think will be the core. And if you're able to do it at scale, I think the impact on the ecosystem, on consumers, and on digital and financial inclusion will be very, very significant. That's what I would say.
Sure. Thanks, Ganesh. So I think we got a very good perspective. You're talking about large banks and digital-first banks, how they're managing large volumes, and how they're changing the core. And then we got good feedback on how a private sector bank is modernizing and what kind of way they're looking at approach of operating the technology teams. And from Mathews, we got a very good insights into how the NBFCs are working in the best-in-class turnaround time and also going to tier 3, tier 4, and going for financial inclusion in a very, very seamless manner. So pretty interesting insights. I would like to thank all the panelists for the time which they've spent in looking at these questions and coming back with very thoughtful answers. And I would also thank the audience over here. I think it's been tough getting in here. So thanks for being able to come here and spend time with us. Thanks.
Thank you so much, ladies and gentlemen. That is not the round of applause that we're looking for. Can we have the decibel levels up? Thank you so much. May I request our panel members to please come forward for a group photograph?